From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, September 17th, and you're listening to the HPS Macrocast. I'm Stacy Kerr from Hamilton Place Strategies, here with John Fagan and Brendan Walsh from Markets Policy Partners, as always. Hey guys, longtime listener, sometime guest, first-time host here.
Great to have you, and we're excited to get your insights on the shifting sands in Washington D.C.
Yeah, good. Well, by the end of this show, you might all be also excited to have Tony return from a well-deserved vacation. So, but I'm happy to be here in his place and love to dig in with you guys. Just another quiet week here in Washington, full of clarity, huh?
Right. Clear as mud.
Yeah. Big open questions on the debt ceiling and government funding, which runs out at the end of the month. Unknown still on the big social infrastructure package Democrats are trying to advance. And still no votes on the bipartisan infrastructure bill, though we are inches from a negotiated September 27th deadline for a vote in the House, which it does not appear to be happening. And maybe we're seeing some of the same struggles for clarity in the global markets this week. John and Brendan, let's start there with a macro update, and then we'll dig in on some of these unknowns in the U.S. What's your read on the week, guys?
Yeah, that's exactly right, Stacy. And thanks again for taking the reins here in the Macrocast in Tony's absence. The picture really is pretty muddy from a global markets perspective, global macro perspective, and the uncertainties over what is going to make it through Congress in terms of the Biden administration's infrastructure package and the pay-fors attached to that, plus the debt ceiling. This is just another aspect of the uncertainty and elevated kind of confusion that is persisted in the markets through much of September, really. You know, we'd had this relatively gentle and low volatility summer where everything was sort of drifting higher, but the combined headwinds of the Delta variant and certainly the risks around China, some mixed messages on inflation and the Fed's reaction there too. What is going to happen with the Fed's taper of quantitative easing, and a variety, is basically a host of other question marks that are hovering over global markets, have really caused things to it's challenged investors to find a real direction in a lot of these asset classes. I think that when we step back and kind of look at the picture, there's an appreciation that the impact from the Delta variant is perhaps fleeting. Everybody expects the wave to pass, but it's not really clear what is going to be where the recovery is going to end up on the other side of it, whether momentum is going to continue. And certainly, we saw some inflation figures coming in that would support on balance support the transitory thesis that Fed Chair Powell has been pushing, that these bottlenecks and other price pressures have really are temporary and will play through. But at the same time, it's gone on for quite some time. So we're really in a position where not just equities, but treasury markets, currency markets, commodities have really have struggled to find a path forward, and I think that this sort of broad macro uncertainty is underlining this struggle for direction.
Yeah, it certainly seems the only certainty is uncertainty right now.
Yeah, absolutely, and so it's going to be a clarifying time. September, October, we've been talking to our clients about this pivotal September, October period in the U.S., the back to school, back to work. We've talked about it on the Macrocast a lot.
Sure.
And this is, and certainly the legislative aspects here, we're crystallizing a lot of uncertainties we're not going to have to wait too long to learn about these.
Absolutely. We've got some real time pressures and some deadlines coming up. So let's sort of turn there. Let's come back to Washington and maybe talk about what we're seeing. I think most most immediately here is the debt and the funding of government. A lot of posturing here this week out of Washington with who will vote for what and who will not, right? Republicans sort of digging in, Mitch McConnell digging in that they are not going to vote for a debt limit, an increase in the debt limit. I actually think that's just the posturing, and eventually they are going to vote. Some of them are going to vote for an increase in the debt limit. I think the reality of us seeing that happen this coming week is probably small. A couple of scenarios that here we sit on Friday, and I think we still don't have the clarity of kind of how Democratic leaders, how Pelosi and Schumer are going to play this. We saw Pelosi, Schumer huddle with Biden yesterday, a long phone call with Biden yesterday on gaming this out. There's a couple of scenarios I think likely for next week. I think one is, do they attach an increase to the debt limit onto the continuing of government, the CR as we call it here in Washington? That would fail. I think if we look at that right now, Republicans just are not going to take this vote without getting anything for it. So I'm not sure just funding the government is enough for them to sort of do it out of the goodness of their hearts. We could have a scenario where Democratic leaders try to put that forward, and because they don't want to miss the opportunity for punishing the Republican to vote against raising the debt limit once.
Right. Yeah. There's definitely there's some real politics in play here. No question.
Real politics at play. If that happens, look, I think that there's going to be the votes for a clean CR or without the debt limit attached to it. It's just not clear whether or not they'll go for that first. And it feels like, no one wants to miss an opportunity to sort of knife people. So we may see the debt limit included with the expectation that it'll fail, but make it a tough vote for Republicans.
Yeah, the debt limit is a very interesting thing on Wall Street. No one on Wall Street really believes that it will, that there won't be a solution.
Yeah.
Right. And that's basically that's born of experience. We've seen this again and again, the brinksmanship, and eventually at the 11th hour, they come up with some sort of compromise and it passes. And so when we first saw, obviously, years ago, when we saw this first come up at issue, we saw some real impact ramifications in broad market sentiment. Now you can only see it as kind of a ripple in the T-bill space. T-bills like really near term, maturities around the estimated debt limit have slightly, evidenced in slightly higher yields. This is, basically just an administrative quirk, if you're putting money in these short-term money market funds and rates and that sort of thing, you don't, even if you're not worried about the debt limit per se, on the margin, you might avoid a particular kind of tenor that would be, that would be most impacted. But for the most part, market participants just overlook it.
Well, let's play that scenario out, because I think it's maybe a likely one that we come right up to the brink. I mean, I do think that Democrats will benefit when they can put more things on the table to negotiate against, right? And Republicans, like I say, are not going to take this vote unless they get something for it. So I think we may see parts of the $3.5 trillion bill come into play, and we may see negotiations extend outside of just what's on the immediate table now. But what's it mean from your perspective? What do you guys think over the next 3 to 4 weeks then, if we do take it right up to the brink?
Yeah, I think I think market participants are going to, it's going to be in the atmosphere in a sort of part of the broad uncertainty, but based on past experience and the way that market participants usually digest this kind of risk, it's not going to be front and center. The expectation is going to be that something gets done. And so it really, if something doesn't get done, it's the boy that cried wolf at this point, right? And if you're in an investment committee meeting sitting around saying, I think we should take risk in the portfolio down because of the debt limit question, everyone would be like, what are you talking about?
Yeah.
Are you serious? We've just seen this movie before. So I think markets are basically going to overlook it until they can't. And in the timeline that we've got, there's no, like, it's still not clear exactly when the extraordinary funding measures sort of run out, and so there isn't necessarily like a drop dead deadline. So there are plenty of ways for the market, for market participants to sort of put this on the back burner and say
this week it kind of went from like October 15th to maybe the 25th or 26th, and right. People are paying their taxes, and it's a little bit fungible.
Yeah, and the narrative on Wall Street is that the Democrats have taken the more difficult road, and I just wanted to ask you a question on this, Stacy, about the sort of wisdom of trying to make this a bigger issue. There's a sense that it could have gotten tucked into, it could get tucked into the larger reconciliation bill and just quietly passed. And that's, but the Democrats want to make an issue out of it. Is that your read on it as well?
Yeah, I actually think both sides want to have some incentive to make it an issue, or to have the option to make it an issue, because I actually don't think we yet know what the biggest drivers of the midterm election are going to be. And so you see a lot of posturing to make sure that people have options. And I think that may drive the uncertainty right up to the deadlines, because nothing is clear and clean here. One thing, they're all sort of being considered at the same time. And we're going to talk a little bit in the show today about the implications from California, right? So you just have these other factors that are happening that sort of start to play into the dynamics. And I'm not sure anybody really knows. And so I see incentive really for both sides to sort of have it as a messaging, even if it's a short-term messaging that gets them the win they want on these other issues.
The markets really aren't going to weigh in too much on this one until they really have to. So sure. We'll see. We'd heard from, when I was at the Treasury Department, I mentioned this before, we heard from Capitol Hill when there was a debt limit fight, that from the Democrats at that time sent messages down to Treasury that questioning why markets weren't taking this more seriously. And the answer was the one that we just gave, which was, market participants believe that the solution always gets found at the 11th hour, so they don't freak out about it. And the message we heard back was, don't they realize that their complacency on this issue makes an accident more likely?
Yeah.
That's
we passed that point in Washington, right? We passed that point where those are the incentives in Washington. Well, shutdown, showdown will continue. No question. It'll be maybe some certainty on the path, but I think continued uncertainty next week. But likely, just one final point on it is, I think what everyone is sort of hearing out of Washington is a likely continuation of funding the government into December. So whether that's the first or second week of December, I think there's been some conversations, but I think there's more. I think there's a little bit, there's more appetite for coming together to get that done than there is on exactly how the debt limit will play out. Well, guys, let's take a short break and come back and talk about the California recall this week and what it tells us about the midterm elections next year. And we'll also look ahead at next week's economic data. You're listening to the Macrocast.
Our Associates and Analysts application is open. We are looking for current college seniors interested in economics, political science, or public policy to join us for a 2-year leadership program with start dates in January, June, and September 2022. Apply today and work on the top debates and policy issues in tech, healthcare, energy, trade, and more. You can apply by visiting the careers page on our website at hamiltonplacestrategies.com/careers.
All right, guys, we're back. John, Brendan, let's look at California. California continues to be a state we can't ignore. If DC is tensions with it, the story in DC is tensions within the Democratic Party. California this week was really about Democratic unity. There's a lot of ways that could have played out. And I think a resounding, 64% victory for Newsom.
Yeah, it was. It wasn't in doubt, and that's, I think the view from the markets on politics is, the political read it tends to be pretty high level from Wall Street, and so the idea of a deep blue state like California sort of rallying around and finding sufficient votes to see off the challenge, I think is, it's incrementally informative, but not really necessarily a game changer in terms of politics. I think we're going to see a lot of questions about what the midterms look like. And I don't know if anybody on Wall Street can read the tea leaves from California to give them a sense of what might happen.
Yeah, it's interesting because I might have argued that they should have cared a little bit more for one reason, and her name is Dianne Feinstein. We've got an almost 90-year-old senator sitting there, and a very complicated process election, right? It was multi-step. You had to vote yes or no, and 64 candidates. I mean, it was not an easy, clear up or down vote. And there's a lot of ways, like I said, that could have gone south just on the complexity of it. And a Republican governor would have had big implications with an 88-year-old senator, Democratic senator, in a 50-50 Senate sitting there. So I take your point, John, that maybe Wall Street wasn't wasting a lot of time, but there were some implications that could have been big. And, we don't always see the Democratic unity on display, like I said, but Democrats really doubled down on Newsom, right? They got convinced people to vote no and then leave the ballot blank on who they would vote for, and a majority yes vote on this vote, then who you voted for didn't matter. So that ended up how they sort of ended up with the big victory that they had. But as it relates to sort of national implications and the signs for 2022, look, I think Republicans picked an extremist candidate over moderates. And I think it's a really interesting thing that's going on right now in sort of U.S. elections. And that is that the biggest voting bloc right now are vaccinated Americans. And Democrats are winning with vaccinated Americans. We're seeing this start to play out. And even Virginia has an off cycle election. So there's a Virginia governor election happening right now. The two biggest issues right now are COVID and abortion. I mean, these are the social issues. These are not, right? These are issues about values, conversations about values, not issues. How about that?
When it comes to, as I said, the Wall Street isn't notoriously great at handicapping politics. And the standard sort of market take is often wrong on politics. And we've seen this, the classic formulation of divided government is something that Wall Street likes. Well, Wall Street really liked the Democrat sweep in Georgia that delivered unified government. And that was a huge boost to financial markets because of the idea that this would allow
they get some clarity out of it.
Clarity, much more muscular fiscal response, and a more unified approach to COVID containment and so forth. The old idea that Democrats are going to be bad for financial markets because of the higher taxes. We've heard a lot about taxes and about where the Biden administration wants to go. But like a lot of things, we've seen the moderates in the House and the Senate take a lot of the, dial down a lot of these revenue raisers. Now that's, you can say what you want about whether that's a prudent approach to spending, but the idea is that the Democrats are not the sort of classic motif of Democrats being unfriendly to markets has been, I think, shown to be a pretty incomplete take in a lot of different ways over the last few years.
Yeah, and the government, the government spending in this COVID era has certainly helped the economy.
That's absolutely true, and I think when we look at the way that market participants are trying to process this massive infrastructure bill, it's not the same. It's a much more difficult thing to price into financial markets to understand what the ramifications of this is. To take away just the legislative uncertainty, that's first and foremost, clearly. But even if they were to pass something, the economic impact is hard to understand with something that is like a long cycle approach like infrastructure. It's not the 1.9 trillion straight into the veins of the American consumer, right? So it's our friend Norman Anderson, who's the CEO of CGLA Infrastructure and the author of a fantastic book. This is not a paid endorsement, but Vision, our infrastructure future in the U.S. Fascinating guy, fascinating insights, and he always jokes that to run on infrastructure is a great way to not get reelected because the infrastructure spending cycle is way longer than the election cycle.
Yeah, and look, it would be a mistake for anybody to think that there are not people in probably both parties, but I can tell you in the Democratic Party who are thinking about the long-term implications of this for what it means for the party, and having that spending now, from our position, communicating that is a challenge, right? Communicating and reminding people of the role of government in their lives.
No question. And getting from the legislative, obviously the energies in Washington, D.C. And all the speculation is focused on the legislative process. What is going to get passed? What's going to be in the bill? But on the other side of that is execution. Execution is very challenging. Sure. And we just haven't seen the U.S. have an infrastructure policy the way that this is really trying to a federal infrastructure policy. The policy was fix what needs fixing, right? Which means, and who's going to know better than the state officials? So you give money to the states and they fix the roads and the bridges that they know need fixing. Sure. But this is a much more grand plan. This is a far different approach, an overarching campaign with goals that include, greater equity, a digitization and sustainability focus, that sort of stuff. Giving money to the states doesn't get you there. You have to have a much greater degree of federal control. Yeah, and this is something we haven't tried in a long time.
And I think you've hit a point that's exactly right, and very less talked about in the sort of back and forth ping pong of the Beltway or of these legislative cycles. And that is that what is being attempted here is incredibly ambitious on the infrastructure side and on the social infrastructure side. Whether you're at 10 trillion, 6 trillion, 3.5 trillion, or if we get down to, 1.5 trillion, it's incredibly ambitious. It has not been done in decades, and it will impact for decades to come. So I think we look a lot at sort of the who's up, who's down daily, where are the votes? And I think there is a longer reshuffling here that is going to come out of the backside of this.
And that's a fascinating aspect, which is, who knows what's going to happen in the midterms? Who knows what's going to happen in 2024? You don't want to necessarily open the Pandora's box to talk about that. But this is something that is going to have a life cycle, assuming we pass a massive bill. This has an arc of development that is way beyond the presidential cycles. And one would assume that if whoever wins if the Republicans take back the House, take back the White House in 2024, they're going to be continuing on these. This is not as partisan an issue as a lot of other things in Washington, D.C. And the idea that some of these projects that get in train are going to be really beneficial on the ground. They're not going to be something that is going to be politicized once it gets going in the way that it is right now in the legislative process.
And we've seen it before from this crop of Democratic leaders. It was called the Affordable Care Act, right? It's about sort of taking the politics of the moment, transcending it, and doing something that's going to be really sort of generationally impactful and transformational. Well, I will say one thing that will be interesting to watch as it does impact sort of the next, a year from now or 15 months from now, and the impact and the midterm elections is we just don't know how these are going to play in the short term, how infrastructure, how the social spending, we just all the evidence we've seen right now, like I said, is just that the attention is much more on values than it is on the specific issues. So that'll be definitely something to watch in the coming months as to how that starts to get messaged and how it starts to sort of play into the politics. But I will tell you, anybody that's watching Washington and thinking that Republicans are winning because of these log jams and because everything's so tight are really missing a bigger story that I think actually the proof is the other way, that Democrats are sort of winning that values, the mask mandates and the COVID and the vaccination. Those are winners for Democrats, as we've seen so far outside of Washington.
One of the things that's really interesting, and we've talked to our clients a lot about this, is that these, just as you say, these value issues, these are not unimportant issues. Obviously, they capture a lot of headlines. They are real. The public health, the divisive approach to public health that we find ourselves in is something that is highly consequential, obviously. But it does tend to mask or cover over some of the considerable consistencies between the Trump administration and the Biden administration. There are a lot of, the posture against China, the focus on working class Americans. It's a very and infrastructure was something that the Trump administration had in its platform when he ran. It was something that they honestly were really pondering.
There's big anticipation of infrastructure week every week. Right.
Right. There was sort of a pivotal moment in sort of late 2018 after the tax cuts went through. The Trump administration focused on sort of one thing at a time, one big thing at a time, and it was that internal debate went toward the China trade war rather than infrastructure. And certainly there were a lot of voices within the West Wing at the time that were trying to direct the energies of President Trump toward a big infrastructure push. But there is some genuine continuity here. And just as a segue into the China issue, we've talked about it a lot on the Macrocast recently. We've seen some of the risks around China crystallizing this week with a very negative retail sales figure for August. Surely, some of that is going to be transitory because of the COVID restrictions, the COVID containment measures that were imposed, and will soon roll off. But we also have their highly leveraged, massive property developer Evergrande circling the drain. This has been an issue that we followed for a long period of time. They are heading into the end game of debt restructuring, and it's spilling over certainly into Chinese markets. The underperformance of Chinese assets is really notable this year. And this is something that, if you're a policymaker in the Biden administration, they've alluded to it, and it's something that you want to begin to message. Perhaps you don't want a risk overseas to sort of blindside you, hurt you by those risks metastasizing into a global impact on sentiment. It's something that the Biden administration should point out, we think, and should be making U.S. investors and the general populace aware that there's some real hiccups going on in the Chinese credit markets and the Chinese economy that that could have global consequences here.
Well, I certainly think that this White House is anxious to stop being blindsided and get on offense on anything to bring some of these sort of conversations in. It just seems like one thing after another here. Well, guys, let's look ahead at next week. What do you have coming down the pike?
It's not a hugely busy data week. We have a lot of the market PMI, manufacturing and service PMIs. But it is a big week for central banks. There's 6 central banks meetings, including the Fed and the Bank of Japan. And who's the other one, John?
Bank of England?
Bank of England, yep. So it'll be a busy week on the monetary policy side. But we won't necessarily get a huge amount of new information in terms of how the global economy is doing from the data side.
So the uncertainty continues. Stay tuned.
Exactly.
Stay tuned. Well, guys, nice being together this morning. Thanks everybody for listening. Have a great weekend.
Thanks for hosting, Stacy. Great to have you.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.